The investment in Pakistan, the investment to GDP ratio remains low as when compared with its competitors, when compared with our grants. So it is below 4% at the moment, whereas our competitors, like Cambodia, Bangladesh, and others have about 20-25%. Now, the fundamental question for economic policymakers or policymakers is that how to attract investment, particularly investment which brings in dollars, because there is an acute shortage of dollars in the country as well. So there are different mechanisms countries have adopted. And Pakistan keeps on explaining the potential the country offers. But the real problem is that the new investors who are mostly in our neighborhood, in Asia, in Middle East, in China, in Southeast Asia, are basically looking at the capability of the state to undertake good commercial transactions which offer, a handsome return on their investment and protects it and nourishes it so that they can make money in a country, and they look at 3-4 markets. Keeping that background in mind, when I was heading the investment arm of the government as its board of investment, I had started dialogue with Middle Eastern countries because they have very rich the oil producing country sovereign wealth funds who are looking for investments. Now, before I get into that how much and how it will happen and what is Special Investment Facilitation Council, can understand what these sovereign wealth funds are. So there is a public investment fund in Saudi Arabia for more than $500 billion. There is a Qatar industry and a half, $30 billion. Now, huge funds, but they are looking for investments, good yield on the reserves of the country. So they are looking at profitable state or other large companies where they can buy shares. They are looking at assets which can be converted into, infrastructure assets, agriculture assets, mining assets, which can give them handsome returns over the period. And the key factor why they are looking at Pakistan and other markets in the region is that they want to diversify their risks from the traditional European and the US markets, because we are living in a very high risk world these days. Now, with this backdrop, Pakistan has established this special, facilitation, SIFC, the Investment Facilitation Council, which has almost everybody in it, and Prime Minister chairs it. I think the signal goes well that Pakistan at the highest level, now there is a priority to attract foreign investment. However, people will start believing in this mechanism more when this mechanism offers quality commercial investment transactions to investors. There's a difference between speeding up work in Britain, because everything gets stuck in red tape and there's a mindset which needs to be challenged. However, one of the key factors of success for the Special Investment Facilitation Council would be building competency underneath to actually undertake these negotiations and legal agreements and disputes and make it a world-class transaction so that people can say, aha, so I'm not going to Cambodia, going to Pakistan because they have the capability, they can protect my money. This is not the money which is aid, this is not the money which is grant, this is not the money which is for development purpose. This money is purely looking for a return on investment, and we need to now get into a different mindset, a better governance structure, better regulatory structure to attract that kind of money. So the challenge for SIFC is that can really put together, the bankers, the economists, the engineers, the lawyers together who have an agreement, understanding how the global markets function, and they can undertake investments. Now I come how much part. I think to me it's irrelevant. We keep on making, when I was there, we had almost $20 billion commitments, Arabia around 10, 5 to 7 from UAE. But the numbers are populist because these numbers need to be translated once real project starts emerging. My advice to SIFC and Pakistan and investor is that pick up some couple of small or medium-sized, interventions, be it in the agriculture sector or mining or IT or ports or LNG plants they want to buy, and show that can be done. And SIFC is functional, and SIFC has the oversight and the muscle to get it done. Once we show the world that we are capable of undertaking a successful investment transaction, then people will start taking a lot more interest in Pakistan. They will basically say, if Saudi Arabia has done it, so why can't we do it? And that is where I think the focus should be. Other than announcing that we can get $75 billion, our needs are much higher. But over the years, our capability to undertake investment transactions has eroded, I'm afraid. So I would advise that in Board of Investment, we should bring 10, 20 good quality people, attract them, and basically insulate the government to government transactions from the countries. They have a lot more to do and they don't know. Pass it on to this group, they negotiate their structure. And then we should make announcements with pride. This much money has come to Pakistan, and the impact would be very, very high. So that is one way. But SIFC linked G2G investments are good thing, and it will help the government to their reserves position and external payment situation. But it is not the solution to our economic growth revival. For that, we need to in parallel build cutting edge policies, that how to revive the economy, how to restructure the economy, and also build stronger institutions with people heading that. And the third key point is that we got to look at it that we need to cut down on protection we are giving to unproductive sectors and investments, so that that money can be diverted into productive sectors and can be created, first of all, to local investors and then foreign investors through joint ventures to move forward. If we take that direction, another 5 years or so, we will see Pakistan's economy rebounding and stabilizing on sustainable grounds.